Hello guys, so this is the pre-market analysis of 11th of December. So see, last night was extremely important, not just for US market, but for the global financial system, including India. And we have seen the US Fed announced its interest rate decision and, released the macro projections also. And as expected, it's 25 basis point rate cut was there. But at the same time, the expectation was about a hawkish commentary, right? But there was a positive discussion. I'm not saying dovish commentary, but there was a positive discussion. So what we need to discuss in this session is we'll be breaking down what exactly Fed announced and what changed in GDP, inflation, unemployment, and the rate projection, and why market reacted so positively, and how this impact our Nifty today, right? And what will be today's opening, FIIDA activities and OI data. OI data is not that significant because the move will be based on that. Technicals also, I don't think that it is significant, though yesterday post-market I've discussed a range of 25,500 to 26,000. So that could be, broken on the upside. Okay. So let's see what happened last night is as expected, completely expected. There is no surprise. 25 basis point interest rate cut. If that's the only thing, then it is already factored in the market. Nothing would have happened. Otherwise, at least yesterday, we wouldn't have got that kind of sell-off, or towards the end, there should have been a short covering. So that is also not happened. But that short covering have to come today. Okay. Why? Because, the future economic projection, which is much better than the expectation. So immediately after the projection came out, you have seen that S&P 500 jumped 0.5%, but did not run too far because Powell's press conference was at 2:30 p.m. And then analyst was expecting a hawkish cut. We were expecting rate cut will be there, but commentary will be negative. I discussed this in the pre-market yesterday, post-market yesterday. Right, and that is the reason why Indian market is falling, and then why there was no short covering despite we know that there will be a rate cut. I've discussed this. But Powell surprised everyone. It was not dovish, it was not hawkish also, but it was very positive. Right. So that is unlike expectation. So something which comes, which is not expected, which is not factored in the market, and then the move will be there. So after he spoke, market added another 0.5% also, and GDP projection was good. Earlier it was 1.6%, now it is 1.7%. Powell even said if the US government shut down, if it wouldn't have happened, they expected 1.9% growth. And 2026 GDP projection was also at a 2.3 level, which is from 1.8 earlier, now 2.3, which is a massive, 0.5% upgrade. So market loved this. And you can see he explained three reasons for this. The productivity has improved sharply, positive, and the consumer spending is strong and stable, positive. Data center expansion, mainly AI boom, that is also driving the capex and the output. So this is extremely positive for the global equities, and you have seen that move. And unemployment and rate projection exactly same as that of September projection. So there is no change. So from this side, I would say neutral impact. Now coming to US inflation. 2025 PCE inflation, if you see earlier, it was projected as 3, but now 2.9. That is good. Inflation is coming down. Growth is going up. Inflation is coming down. Very good sign. 2025 core PCE, if you see earlier 3.1, now it is 3%. And 2026 projection also, if you see headline PCE is 2.4% versus 2.6. Core PCE is 2.5%. Expectation is 2.6%. So again, all these are very good. Again, very highly market friendly. Now, the interest rate projection range, the median interest rate projection is unchanged. But again, for 2026, the lower band is actually widened. Earlier, it was 2.6%. Now it is 3.9%, right? Earlier, it is 2.6% to 3.9%. So that is actually slightly lowered. That band is lowered. Upside it is 3.9% itself. The downside from 2.6 it is 2.1%. So the band is 2.1% to 3.9%. Even a small widening on the lower side. What is that indicating? There is a space for some more cuts, the deeper cuts, and market consider that also as very positive. Now coming to press conference, there are three key takeaways. Right, these are the main bullish triggers actually. The cut itself, a small trigger because it's expected. The conference, we're looking for hawkish, but it was positive. It was not hawkish. And the three key takeaways, Fed will stop selling bonds and start purchasing 40 billion per month. Start purchasing means That is injecting liquidity. So when Fed sell bond, it sell bond and take money from people. So liquidity will be sucked out. Now the Fed is purchasing bonds, right? So bond is there with the people or the companies. So it will purchase. So what will happen? Give money. So this 40 billion per month is given to the market. So injecting liquidity, which is also equal to another 0.25 basis point cut. And during COVID also, Fed treasury holding was like, if you see before 2020, it was 4 trillion. And after the pandemic, it's 9 trillion. So they later started selling the bonds to fight inflation, because you sell, suck out the money, reduce the liquidity, because inflation need to be controlled. Now it is around 6.5%, 6.5 trillion. So last night what he said is they will stop selling bonds, right? So when you sell bonds, what will happen? You are selling and taking back money. Now what they will do is they will start buying. So when they buy, what will happen? You will give money. So you will inject money to the market, and that will add liquidity. Market love this. So you'll start buying 40 billion per month, means 40 billion will goes into the market per month by taking the bonds. You got my point, right? When they buy means buy back. Even RBI open market operation also discuss the same. So RBI also went for a rate cut and buying back bonds. So here also they are going for rate cut, buying back bonds. So that's why US market have rallied. I'm expecting that Indian market also will go for upside today. So it's this one is actually this buying back bonds worth 40 billion per month is equivalent to 25 basis point cut. So you need to take it in such a way that there is a rate cut of 50 basis point. That's huge. Liquidity infusion will be there in the market. And that's a strong bullish signal. And again, one side, if you see, inflation is also very stable. Indian context also, it's the same. So Powell, in fact, said that the current inflation is around 3%, mainly because there are, multiple factors like the tariff-related temporary effects is there, and expected to peak in 2026 quarter one, and that should soften afterwards. So there are some positive aspects there related to that. Because of all these, Dow Jones is 1% up, S&P is 0.7 up, Nasdaq is 0.34% up, and Nasdaq is mainly dragged by Netflix and Nvidia. VIX have fallen below 17. It was 17, but now below 16. That's again a bullish signal. So uncertainty is over, the fear is over. What is the impact on India? See, Gift Nifty is already indicating positive jump near 26,000 at night. Remember, yesterday our close was 26,750 and futures was trading at around 100 point above, right? So even if you equate it with that early morning trading, it's around 966, 966. Even if you equate that with the futures, it's a gap up of around 100 points, right? That's what, in case if you're not getting the gap up, we should be going on the upside, because that will be, covered. And again, if you look at the arbitrage, Infosys, 2.5% up, Wipro is 2% up, right? Rate cut there is very good for especially IT companies. And SDFC is 1% up, ICICI is 0.5 up. So strong positive for IT. Banks are slightly positive. So the sentiment is very positive. So the market views, again, India-US trade negotiation is going on. This is day 2. And we may see influence of this tariff discussions, market access and technology and services negotiation and all these. If that is also, fixed, then we may go and hit all-time high. That also could be broken. And 27,000 may be possible this month itself. Yesterday, post-market, I told you that was the expectation. But since they have broken 26,000 and they have broken the technical level also 25,800 and close below that, that's unlikely. And I've told you 26,000 could be the resistance for this week. But I think, today itself, there is a probability, there is all scenarios which is in favor that the market could break that. Again, if you look at FIAs, last day net sellers 1650 crore they have sold, and DIAs they were net buyers, they are absorbing the pressure. 3750 crore they bought. Open interest analysis, I don't think that is going to give you a good trading view today. Because of this only the market will move, because a lot of shorts is there. I'm looking for short covering, the short unwinding today opening itself, right? So index futures, if you see, open interest has increased around 3.2%, index option 34%, call addition, put addition is 14.2 only. Now these calls have to run for the cover today. That's what I'm looking for, the higher call writing, and that's the reason why market have fallen aggressively. So there are good shorts, They will have to run for the cover. And the PCR fell from 0.87 to 0.74, which is slightly bearish undertone. And if you look at the participant positioning in options, the retailers, the clients 0.2%, 20% bullish, and FIA is 8.7% bearish. Prop traders 10.8% bearish. So futures, if you see, the client 68% long, proprietary traders around 59% long, FIA is 89% short. So FIAs are heavily short in futures and short in options also. Prop traders, again, both are shorts. Okay. So only the retailers are looking long, but today the scenarios may change. FIA still can sell, and December is a month that they used to sell also. So that may be continued, but still there will be a short covering that we should be getting. Okay. Now, again, see, better GDP projection, that is good. Inflation lower projection is also good. Bond purchase that they are going to do, that is going to inject liquidity. Rate cut, that is good. Hawkish cut did not happen, rather positive commentary was there. That is also good, and market reacted strongly. So these are the things that you need to keep in mind, and we will open positive, especially the IT stocks, and we may get around 100 point, if not 100-point move is minimum required. So, if you are not getting a gap up, that's an opportunity to enter on the upside. And let's see, unless you get a major selling signal, any dip is a buying opportunity. So heavy FIA shorts are there, right? So FIAs may hold it, but other shorts, they may run for the cover. India-US trade negotiation is going on. That also you need to look into. Option chain positioning also you need to watch, as I told you. Only problem is that FIA shorts are still there. They can drive the market. And for them, these are not the concern, right? They get the liquidity there. They can invest in many other market with more security, more returns. When it comes to India, rupee depreciation itself is affecting them. So it is easy for them to take this money back. It is easy for them not to bring that liquidity to India, rather to shift to some other countries where you get better returns, where there is stability in the currency also. So keep that point in mind and trade wisely. If you're looking for any live market mentorship sessions, we have the live trading sessions every day. Can join us, and that's our mentorship program. We teach things practically. So see you there. Thank you.